Hello, everybody, and thank you for listening to the WMA podcast. My name is Jay Kane, and today we got the opportunity to speak with Nick Shaheen, the Chief Compliance Officer for Financial Services of America. Listen to him give a unique perspective about working in a non-client-facing role in the financial advising industry. He walks us through his day-to-day operations and how he interacts with advisors in client-facing roles, as well as giving advice to undergrads who have an interest in the industry and much more. Hope you guys enjoy. Nick, thank you for joining the Wealth Management Podcast. We're happy to have you.
Oh, thanks for having me, Jake.
So just kind of to start off, can you give us a little background and tell us, how you got to where you are today? Tell us about yourself a little bit.
So I went to Albion College and I knew I wanted to do something in business. That was kind of the major I wanted to go into, but I didn't really know any of the specifics of exactly what I wanted to do. And my sophomore year, I took a financial markets class, and it was just something that I really kind of connected with, dealing with investments and, it was a little bit more on the research side than maybe the client-facing side, but knew that was just something that really appealed to me, and knew that's something I'd want to go into. And, as I was working through internships and career opportunities, was trying to find something that would fit that. But unfortunately, this was in kind of the 2008 to 2010 period where there was just a lot going on, and unfortunately, not a lot of firms that were hiring. A lot of the internships that students that were a couple years older than me had gotten just weren't there anymore. And so ended up in the position with the company I'm at now, but was more on the client-facing kind of the advisor role, or the kind of more the sales role, because that's really the only jobs that were available, since companies knew they didn't have to pay you if you weren't bringing in assets or generating fees or commissions for the company. So there were a lot of those types of positions available, and I kind of got to pick from a few different options of what I felt was going to be best for me. And I was really blessed that I started with a company and was able to kind of, grow with the organization from really more the insurance sales side of things, where I was one of the top home and auto insurance sales producers for a couple of years as that department was growing within our organization, to going back, getting all of my securities licenses, eventually being asked to get all of my principal licenses, and then becoming the principal. And we decided to start an RIA because of the DOL regulations that were coming into play in 2016, 2017, and kind of getting tabbed to kind of build that part of our organization from the ground up. So it was not something that I could have planned when I started, to get into the industry. But, one thing I've learned and listening to a lot of people in different parts of the industry, they kind of get started in it, with a company or in the industry, and it just kind of grows, and they never could have planned their path of how they'd get to where they are today, but it just kind of, snowballed, and, one thing led to another.
Absolutely. Could you kind of talk to us about the day-to-day operations that you're involved in, and possibly a little bit about your company and, what you're doing now?
Yeah. So Financial Service America is a fairly large size independent financial planning firm based in Metro Detroit, but really kind of expanding the entire state of Michigan. And we're starting to spread across, state lines with everything moving virtually. It's a little bit easier for us to take on our clients' kids or beneficiaries in other states. And so, like I said, we've grown from more of an insurance organization to, more of a holistic financial planning firm. And so my role as the Chief Compliance Officer really covers a lot of different areas. I'm responsible for the day-to-day operations and the compliance operations of our RIA. As I mentioned, I had kind of helped create and build from the ground up. So starting from nothing, having to complete all of our registration documents, and making sure that that firm is, in good graces with the SEC, and that we have everything, filed appropriately, and all the disclosures are set up and meet the guidelines that we're given. We also have a broker dealer affiliation. And so I serve as a branch manager of our OSJ. So I kind of have a little bit more responsibility of supervision for that, firm, which there's definitely a lot of crossover, but there's also different rules for an RIA that's SEC registered in our case, as well versus a FINRA registered broker dealer. So, just kind of creates some confusion of sometimes having to wear multiple hats and, well, this is the rule for this type of firm, but the rule might be a little bit different for another firm. And then because we also do a lot of annuity and insurance business, I kind of, there's not quite the same compliance regulations because the insurance companies do that more themselves, but I kind of step in as a buffer between our agency and those insurance companies and make sure that we're tying in as many of the compliance guidelines as we can, knowing that even though it's an insurance product, it still has to fit the compliance requirements of the broker dealer and the RIA. And because we're still, a smaller firm, we're not, a big wirehouse, and having to wear multiple hats, I have to make sure that the kind of operations of the investment management and all of the accounts get open correctly. And a lot of times it's just, jumping in and putting out fires and making sure that clients are taken care of, and putting our advisors in a position that they can really focus on their client relationships and taking care of their clients and bringing in new clients and bringing in new assets to the firm, and not having to worry about, well, did this IRA account that I submitted a week ago, did it get taken care of? If there was an issue, making sure whatever needs to get resolved gets taken care of. And so I know there's a lot of focus in the industry on what those client-facing advisors have to do on a day-to-day basis. And so I kind of oversee a team of individuals. All of the stuff behind the scenes is running smoothly, and making sure that the advisors don't have to worry about it.
Absolutely. So kind of diving in a little deeper to that, could you kind of touch on the specific functions that the back office handle? And, most of the kids in the wealth management program at State, they're going in wanting to be, having these client facing jobs, and the client facing gets all this attention. So could you kind of touch on what the back office does and how you play a role in that and with the advisors?
Yeah, and a little bit just going to depend on how the firm's set up, but the back office can go from everything to making sure that accounts get open. So that's, making sure the application gets filled out. It gets, sent into the, the appropriate company with, a firm like us, where we work with multiple custodians with TD Ameritrade, SEI, having our broker dealer affiliations, as well as the insurance company. There might be applications being sent to as many as 3, 4, 5 different entities, for any one client. So it's making sure those accounts get open, making sure those, transfers happen, that the funds come in. Sometimes they're coming into our custodian at TD Ameritrade, and then might need to get transferred out to either multiple accounts at TD Ameritrade. We might need to handle a Roth conversion, or there might be transfers over to one of the insurance products in a new insurance company. So kind of making sure that all of that behind the scenes is going on. And like I said, we have a kind of a team of individuals that are working to prepare those documents and make sure those are getting submitted, and taking care of any the NIGOs or it's not in good order. So it's anytime that the company might come back and, hey, we're missing a client initial or signature, or maybe there's a date of birth or social security number that wasn't filled out correctly, whatever may come on, making sure we get those resolved as quickly as possible to, again, deliver the best end experience for the client. But that's just kind of the start. At the end of the day, this is, the client's, money, and like most, financial advisor firms dealing with retirees, we have to deal with making sure they're taking their RMDs, taking any other distributions that they need. Clients that are maybe making, their IRA or Roth contributions, kind of handling all the money movement behind the scenes. So, that if a client needs money. We've had clients, that were buying houses and are taking distributions to cover down payments, or, making sure that their RMDs get met, whatever they need. If they need money, we don't want, them waiting any longer than they have to get those funds. In a lot of cases, those clients need money to maybe pay their bills, or, whatever may be needed for them. And again, for a retiree, that doesn't have a pension anymore. That's their livelihood. And so we need to make sure that their money's coming in on a regular basis. And again, that's something that, most advisors are going to come up with a plan. They may not execute that. Number one, paperwork may not be the advisor's strong suit. And so we don't, as a firm, we don't want our advisors getting bogged down on something that's going to frustrate them or, maybe not even get done correctly, which again, just causes a delay or frustration for the client. And for an organization like us that's also growing and trying to bring in new clients and new assets, we want our advisors really focusing in on those client relationships and spending time in front of their existing clients or prospects and not have to worry about, well, did this RMD form get signed and processed? So there's a lot of that. And then, and again, this part really depends on how the firm is structured and if they're managing the portfolios internally or if they're like we do on a lot of our client portfolios outsourcing to third parties. It's making sure that those third party relationships get set up properly for new accounts, or if there's any updates or changes that need to be made, again, to make sure that those new accounts get invested correctly, making sure that those accounts aren't sitting in cash and not making anything when we've had this great run up in the market we've had over the last decade. But also, when we need to take a distribution, making sure we free up cash, try to do so in as tax efficient manner as possible. And again, it's just all the little stuff that really goes on behind the scenes to make sure that the client's money is doing what it's supposed to for them, whether it needs to be invested, they need distributions. Unfortunately, when a client passes away, and making sure that those funds either get transferred to the spouse's name or get transferred on to the next generation. There's a lot that goes on really behind the scenes that, again, some smaller firms, the advisor might be doing 100% of that, or maybe they have one or two admins that can kind of work behind the scenes, or for a larger firm like us, where we can kind of have that dedicated back office support system to allow our advisors just to really focus on the client relationships and not have to touch too much of the day-to-day operations.
So kind of going off that a little bit, could you touch on what the communication process is with the client-facing advisors, so that relationship you have with these advisors who are with the clients face-to-face, I guess? How exactly do you work with them?
And this is definitely something that's changed over the last couple of years because of COVID and having to move to more of a remote environment. So we have, one office, main office location in Warren, where all of our advisors were kind of headquartered out of. So before COVID, those advisors were in the office 2, 3, 4, maybe 5 days a week. So they'd kind of come in, take care of their paperwork, have communication with our internal team of what needed to be done. And then they were usually either, on the road going to see clients, or clients were coming to the building. And they were a lot of times getting the signatures or whatever needed to be done with those clients. Because of COVID and having to go to more of a remote environment, we've had to build and update our processes internally to allow for advisors that might not be in the building more than one day a week, or some of our advisors that it's maybe only once or twice a month. And so a lot of that comes down to the CRM system. And I know there's a lot of, great ones out there. There's a decision we made 10 years ago where we ended up actually building our own CRM, just to make sure that we could have all the functionality and the tools that we wanted to. And so one thing that we've spent a lot of the last 2 years building for our CRM is different workflows. So that, for example, if a client needs a withdrawal, it's not the advisor having to make a phone call, talk to someone in our back office, or send an email that might get buried with the other couple hundred emails that we receive each day. They go into our CRM, go into their client and say, this client needs a withdrawal. They're able to fill out the information that's needed. And then the CRM directs it to the appropriate person on the team to say, hey, this client needs to take a withdrawal, knowing that if it's coming from their TD Ameritrade account, it's a much different process than coming out of an annuity account that, one might just be something that's done on TD Ameritrade's website versus something that the client might actually need to sign a form. So, really we spent a lot of times building out those workflows and to handle everything that our clients need from a service standpoint. Really makes our advisors' job easier, but it also lets them be able to go back in and check on, okay, I requested this withdrawal yesterday. Where is it at in the process? okay, hey, it was requested from TD Ameritrade, and now this, our internal team is calling the client, every few days or a week to say, hey, did you get your, TD Ameritrade sending you a check? Did you get it? This money was sent to your bank account. Did it show up correctly? So that way, if there are any issues, we've had banks reject deposits for whatever reason. We want to catch that, not have it be an angry client calling us in a couple of weeks saying, hey, I asked for $10,000 a month ago and it hasn't come yet. What's going on? And so just really having processes is really important in making sure that gets done and nothing falls through the cracks.
Yeah, that's what I was just going to touch on was, what were some areas that firms can get in trouble if they don't pay attention to these operations or these processes that you touched on?
Yeah, I mean, the biggest thing is going to be an unhappy client. At the end of the day, and again, a lot depends on the structure. If you're a RIA and you're charging a management fee, or the client, or client's writing a check for a financial planning fee to the firm each year versus more the commission side of things. And obviously it's, the client's investment when they buy something and you get paid a commission. But at the end of the day, that it's the clients that generate revenue for the firm. And so if they're not happy and they're taking their money elsewhere, there's not going to be money left to pay the bills or a firm to run. And so it's delivering that, that what we call, world-class client experience. And so, again, if client needs money, we want to make sure they're getting that, as quickly as possible. So, at the end of the day, the money is just kind of a tool. It's, what's that money used for? What does that allow that client to do? Is it, that's what they need to pay their bill? Are they going on a trip? Are they, taking the whole family and grandkids down to Disney and they need, is that why they need the $10,000, or is it $10,000, the down payment for a car? Whatever the reason is, that's what matters to the client. And so it's delivering that experience so that they can live their best life and not have to worry about, we're at their finances. That's what we're there for. And so if you have those back office operational inefficiencies, whether things don't get done or it just takes longer than it ideally should, that can lead to a poor client experience and eventually lead to, clients, choosing to work with another advisor, or it might just be as simple as they're not referring new clients to you, that they, otherwise, could or would be. There's a lot of studies and reports done and, why clients leave their financial advisor, and it's usually not over performance. Performance and investments is really something that's been commoditized the last, 10 plus years. And so clients can get pretty similar experiences with multiple firms. It's the service that they get and kind of the feeling they get working with both the advisor and the support staff. And so we really want to make sure we're delivering that world-class experience to keep the clients happy. And, that's why they want to work with us and kind of, generates referrals and lots of opportunities for our advisors to bring in new clients as well.
Absolutely. So I really wanted to hone in on one thing for, the people listening that are considering financial advising, and, there's a ton of different routes you can take, but, going into the back office role, how did you know it was good for you, and what advice would you give to these college students that, maybe don't want a client facing job and more of that back office responsibility? And if you could go back and, do anything differently with your career path or where you ended up right now, what would that be? And again, what advice would you give to those kids looking for this?
Yeah, a lot really depends on what they, what an individual is looking to get out of their career, kind of what their skill sets and strengths are. I started in that client facing role a little bit more on the insurance sales side, and then, kind of transitioning more into the financial investment management side. But again, a lot depends on the firm you work for. But when you work with when you're in those client facing roles, you might be on the client schedule. So if you're, working with, clients that are still working, that might mean you might have evening appointments, or you might have to go see some clients on a Saturday. You might be working different hours. One of the marketing activities that our advisors do to attract new clients, we do seminars 2 nights a week. So, as an advisor, if you're trying to attract new clients, you might be working Our seminars, our advisors show up at 5 and are probably there till 8, 9 o'clock, setting up, meeting with clients, presenting, taking things down. So you might be, having to work some nights and weekends. There's some people that, really kind of like and thrive in that type of role. That might also mean that you can take Friday afternoons off because you don't have any client meetings that you need to, be a part of or prepare for. So you might have a more flexible schedule, but you might have to, work some unfavorable hours. Typically with a back office role, it's going to be a little bit more of a 9 to 5. Hey, the market's open. So if you're doing trading or processing withdrawals or applications, you need to be open, working when the market's open, but you get to go home at 5 o'clock. You might not be, you typically don't have to have those evening or weekend hours, in terms of, attracting clients, or it might be, the client calls, in the evening or Saturday. And again, a lot depends on what kind of boundaries and things you set up with your clients. But if, sometimes if a client calls you at, 6 o'clock at night and you're eating dinner with your family, but it's your biggest client, you have a kind of decision to make. Am I taking that phone call? That might not be what you want to do for your personal life, but it's your $10 million client calling. Are you, how many times, and are you not answering that phone call on the first or second ring? And so, that's one big advantage. And so that was, one thing that I really liked of having a little bit more consistency. It was when I kind of transitioned to this role as a position. My wife and I had just got married. We had kids a couple of years later, and having, twin, little girls. It was nice to be able to be home more, have a little bit more consistent hours, not have to work nights and weekends. So I could be, a little, home and more present for them. Again, there's definitely benefits to both. Interacting with clients, you get to meet a lot of really nice people, hear a lot of great stories, have a lot of fun with that. But, sometimes there's a little bit more consistency, in that, non-client facing role where you know what to expect. And part of that consistency a lot of times is going to come down to pay as well. If you're in a, more of a back office role, it's typically going to be more of a salary position. There's probably some sort of bonus tied to that, but you're probably going to have a little bit more consistency of knowing what your paycheck's going to look like. If you're in that client facing role, and again, a lot of it depends on the firm you work with. Some of those positions are 100% commission, or kind of the revenue you earn, you get a payout of that. So the good news of that, if you're really good at your job and you're bringing in a ton of revenue, you can make a ton more money in those client facing roles than you're going to make in a back office role. But as you're starting off, or somebody that's maybe not great at bringing in client assets, it might be harder, to earn a decent living, as well as there can sometimes be some fluctuations of when you get paid and how much you get paid. And there might be some really, really good months and some down months, and having to kind of manage your finances and, making sure that, the big paycheck you get covers, the next few weeks where there might not be another paycheck or as big of a paycheck coming in. And again, there's definitely some people that thrive in that type of environment, and it really brings out the best of them. And there's some people that it can be a struggle for, and it can create a lot of emotional stress, or it can definitely impact the family dynamics. As college students graduating, pretty good position to be in, to go on that commission only job. Your bills aren't very high. Mom and dad might still be helping out a little bit, or willing to help out a little bit. Maybe you're even living at home. And that role can be a lot easier versus maybe somebody that has a family to support, kids at home. Sometimes that can be a tough position, to be in if there's not that consistent, paycheck coming in. But again, a lot depends on the firm that you're at. It's something we instituted with the advisors that we're hiring now, where there is more of a base salary and bonus. So, there is that consistency. They know what to expect. They have a paycheck coming in every 2 weeks. And, we want to make sure that they can, take care of their responsibilities at home, earn a comfortable living, and then have a chance to grow their income as they, develop in their career with us, and, not have that, be a burden to them, or, be a reason why maybe they don't make it in the industry because they decide to leave for a, consistent paycheck with, maybe another industry.
Yeah, that's awesome. I appreciate you sharing that with us. One last thing, just any piece of advice that you'd offer any college student right now, maybe possibly thinking going into the financial advising industry, whether that be back office, client facing, maybe some things you wish you would have done, 5, 10, 15 years ago differently that, maybe we should keep in the back of our minds right now? What would that piece of advice be to all of us?
I think the biggest thing is to always be learning. There's a lot that changes in this industry. There's a lot that moves really quickly. And the biggest thing that I think helped me in my career is that I'm spending time usually outside of the typical 9 to 5 hours reading about, learning about the industry. One of the things that I've noticed of our advisors that are the most successful are the ones that have an interest in the industry and are reading different blogs or attending different industry events to try to learn and better themselves, and are not just kind of staying complacent. And that's something I've noticed for the advisors that maybe didn't succeed, are ones that maybe don't want to put in the extra effort. And part of that is the material that you learn and the knowledge that you gain from it, and part of it is just kind of the the work ethic that you develop of always trying to improve yourself, learning something new, and particularly because at the end of the day, that client facing role to some capacity has a sales component, is kind of learning from what happened. So if you were working with a prospect and they decided not to do business with you, being able to learn from that experience, what worked, what didn't work, and being able to, make some improvements for that next prospect you're in front of, to hopefully be able to earn them as a client, and taking the ones that, you were able to earn as clients, figuring out why did this client, choose to work with me when, they had another advisor, they could have, gone somewhere else. Why did they choose to work with me? And focusing on those aspects with with your next client. So again, I think just being a student and always continuing to learn. And I think big thing for the MSU students that are graduating, you're used to learning, and kind of keeping those skill sets and not letting them kind of get dusty. One thing that changed for our firm a few years ago is a lot of our advisors had to go back and get additional licenses. And so some of those guys that hadn't taken a test in years really struggle with having to, read the material and learn and take a test. And, there's a lot of regulatory change in our industry. There's most likely more coming. Who knows when you might have to get a new license or you choose to get a new designation. And if you're always learning, it's just going to be a lot easier for you to, pick up that challenge and, accomplish it and move on to the next.
Absolutely. Nick, thanks a million for coming on the podcast. We all appreciate it. You're a great resource, and thanks a million.
Thanks for having me, Jake.
If you like what you just heard, please like, comment, and share. This is Lance Mullen, producer of the MSU WMA podcast. MSU WMA, or Michigan State University Wealth Management Association, is a student organization part of the Eli Broad College of Business, located in East Lansing, Michigan. Our mission is to inspire and educate the next generation of financial planners. Thank you for listening to today's episode. If you enjoyed, please check out our channel on all platforms such as Spotify and Apple Podcasts, and check out our social media at MSU WMA and MSUWMA.com.